Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We're just talking about Peloton. A lot of news there. Switching out to CEO, that's never good. Let's check in with Mark Gurman. He is a Bloomberg News reporter based in Los Angeles. Mark, I know you did the reporting on this story. What's up with the CEO?
Yeah, Barry McCarthy, 2 years, he's out. I'm honestly surprised that he stayed this long. Nothing really to do with his age. He's in his 70s. He came out of retirement for this job. He used to be the CFO of Netflix and Spotify, but this was a tough turnaround job. His predecessor, John Foley, really left them in a hole. For those who don't remember, at the height of the pandemic, Peloton exploded, right? Everyone was buying bikes in order to work out at home when gyms were closed. And Foley and Peloton made this bet, which obviously in hindsight we know was a terrible bet, that gyms would continue to be closed, COVID would last forever, the pandemic would never end, nobody would leave their homes and apartments ever again. They built a bunch of bikes. That's the bet they made, because they started building a facility in Ohio to build many more bikes. They invested and grew the company so quickly, right? And then when things started to reopen, Peloton fell flat on its face. They've had to lay off thousands and thousands of people. They had to restructure the whole company. And it was a hole that you couldn't really, dig yourself out of. McCarthy was able to get Peloton to free cash flow. But at this point, their share price is about $3 a share. Sales are down. They continue to miss their estimates. They continue to miss their own forecasts. Time for him to move on. And I think he made the prudent decision for himself, and I'm surprised it took this long.
So you mentioned CEO of Netflix and Spotify, right? So he is the subscription-based guy. Yeah. CFO. CFO, sorry. Yeah. So he's a subscription guy. So are we learning anything about what Peloton will do and how their business model will evolve?
Well, he's the outgoing CEO of Peloton, of course, and he did implement lots of subscription-based features into the company. One of the first things he did was a subscription model for Peloton hardware. So you could actually lease a Peloton versus paying $1,000, $1,500 outright for it. So that was a big thing he did. The other thing is they've expanded their content offerings. They've expanded their digital app tremendously, and these are all subscription-based products. So he's sort of turned it into a subscription. Now, you didn't ask me this, but I will make a projection of my own. I think that they're going to try to sell this thing now, right? Laying off more people, doing a $200 million restructuring. They have no CEO in place now. Two of their board members are, taking over. A new board member, or one of their old board members, is becoming their new chairman. This would make a good fit for something like Amazon Prime or for Netflix, right? Your Netflix or Prime subscription get a little bit more valuable because it comes with fitness content. Maybe one of these companies could pull in all that content for under $1 billion. I think that's the smart move for Peloton's board at this point. Try to get rid of this thing.
Wow. All right, Mark, great stuff. Great reporting. Really appreciate you taking a few minutes of your time, Mark Gurman.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's break down a little bit more on Qualcomm. Angelo Zino joins us, Vice President and Senior Equity Analyst for CFRA Research in New York. Angelo, what's your takeaway here? The market certainly likes what they saw from Qualcomm. What's your takeaways?
Yeah, no, we love it. We upgraded the stock to a buy actually on the news. I mean, typically, we hate upgrading near the highs for a stock like this, but it's warranted. And I think kind of the biggest takeaway on our end is this is a company that is clearly going to see some significant diversification away from smartphones over the next couple of years. I think a big concern of ours was eventually Qualcomm would lose that Apple business, right? As Apple kind of starts, internally designing their modems at some point in time. It might be a 26, 27, 28 thing, but it would happen at some point in time. But that said, you kind of look at what they just did here. Android ecosystem is definitely coming back, specifically in China, grew north of 40%. More importantly, I think the numbers that they gave out for that automotive pipeline, extremely impressive, kind of growing from 30 billion 18 months ago to about 45 billion now. That provides some really nice visibility as you go into 2026 and beyond. And then you guys highlighted the AI PC opportunity. And I think that's a really underappreciated story. They didn't throw any numbers out as far as AI PCs are concerned and their opportunity there this quarter, but they did say that they were going to start throwing those type of numbers out next quarter. So I think that also is a potential catalyst that we can kind of see as they kind of go into their June quarter results in July.
All right, a lot to break down on that, and we'll get to Apple in just a second. But where do we learn from Qualcomm where we are in the smartphone cycle?
Yeah, I mean, as far as the smartphone cycle is concerned, hey, listen, this is a market that we think is still peaked out in 2016. We don't see it getting back to those levels anytime in the near future. But that said, I think what the real key takeaway here for Qualcomm is concerned is we're looking for low single-digit growth as far as the smartphone market is concerned. But more importantly, the mix, especially on the Android side of things, will continue to kind of shift towards more premium end devices. That's something that Apple has clearly benefited from over the years from a broader smartphone market. But as we kind of see that increasingly take place on the Android side of things, specifically from AI-related smartphones, that provides greater content growth for Qualcomm. So Qualcomm will be able to outgrow the smartphone market here over the next couple of years, we think, because of that, the content gains that they're seeing, unlike what you're seeing from the likes of, Qorvo and Skyworks, which is just, over the last 2 nights, reported results that were pretty abysmal.
Hey, Angelo, just a naive question for me. I just don't know the answer. But I do know they sell a lot of chips into China. Is that a risk for them? And if so, how do they mitigate it?
Yeah, I mean, that's a great point. I mean, geopolitical risks are always out there. And, I think, it's been an issue that kind of Qualcomm has had to contend with. I mean, they were more, relevant in, let's say, Huawei's ecosystem here years ago. And you kind of look at what they said last night, and they're essentially going to be completely gone from Huawei phones by the end of this calendar year. So I think in some respects, they're going to be forced out. In certain instances of, certain devices out there. But I think that's a great question. I don't know if there's a way of necessarily mitigating that risk out there. But, in the same respect, a lot of kind of the chips that they sell into China are also not necessarily getting sold into the China market. They're getting kind of pushed out and kind of getting sold across the rest of the world, even if they are China-related phones. But it is it's a risk out there over time, absolutely.
You mentioned the AI PC cycle, which leads us to sort of the AI smartphone cycle, which leads us to Apple, trying to connect all those dots for us. I'm trying. I don't know if that worked. But what kind of AI computer, AI phone cycle do you think we could be under, and when does that kind of hit?
So, as far as Apple is concerned, I think this is an absolutely massive opportunity for them here in calendar 2024. And, the way we would look at it is, listen, the results here are going to be tonight are going to be what they are going to be. We don't expect anything good. But as soon as next week, you're going to start going into a refresh cycle of iPad announcements. You're going to see developers conference in June, and then later this year, we do think you're going to get on-device AI smartphones on the the iPhone side of things, as well as another upgrade cycle opportunity on the Mac side of things. So this is a really interesting opportunity because we expect them to refresh essentially their entire hardware ecosystem here over the next kind of 8 to 9 months. And we do think that is underappreciated to an extent. Whether or not kind of consumers are going to go out there and actually upgrade their devices to these kind of AI-enabled, devices remains to be seen. It all depends on what exactly Apple kind of rolls out. But, we know they're going to put some crazy marketing power behind all of this, right? And we do think that there is potential for them to kind of at least increase pricing across certain aspects of their ecosystem. So that should also kind of help support, an improving revenue trajectory as we get at least into the iPhone 16 cycle later this year.
So in reality, though, Angelo, what can the company say today about China? Can they say, because I think it's unclear whether their challenges in China are from competition, from, changing consumer behaviors relates to buying Chinese products or anti-American products. I don't know how to kind of phrase that or parse that out. What can they say? What's the market hoping to hear?
Well, I'll tell you what I'm hoping to hear, and that would help me in terms of kind of the China story. We think China revenue declines are probably going to be closer to 15 to 20%, which is worse than expectations out there.
Wow.
But more importantly, I think is going to be exactly what they have to say about the China ecosystem out there, and kind of what they have to say about the installed base. If they can kind of come out and say, hey, listen, we're seeing significant declines out there. And maybe part of it is because, hey, listen, you've got some tough comps out there. Maybe part of it is they don't have an AI-enabled device out there where other China OEMs out there are kind of rolling out their AI-enabled devices out already. And then of course the Huawei play. But they can come out and say, hey, listen, the installed base continues to remain either the same or incrementally grow out in China. I think that would alleviate some of the concerns out there about the China ecosystem, at least for us, and would also support the view that this might be more of a cyclical thing than a secular structural thing.
Okay, here's my question. I have an AI smartphone. What is that going to do for me that my phone doesn't do now? Do we know the answer to that? Angela, do we know that?
I mean, listen, I think when you kind of look at you look at what the S20, I think, the most notable kind of AI-enabled phone that's out there right now, at least from my understanding, is the S24 with Samsung, and they've got some kind of incremental, changes out there in terms of supporting multimodal capabilities, translation, all that kind of stuff. It's not necessarily anything groundbreaking in nature, right? I think what's going to be more important, at least from Apple's perspective, is what they can kind of do in terms of things like content creation, imaging, all that kind of stuff. Will it kind of get some of the Gen Z population out there a little bit more interested in potentially upgrading towards these devices? But to your point, is there anything kind of earth-shattering right now, some kind of killer opportunity out there on the AI side of things? I think that remains to be seen. It all depends on what some of these OEMs kind of come out with and showcase that to consumers.
I don't know. Is it gonna do my laundry for me? I mean, you gotta think about these things, right? Oh man, do my taxes. All right, Angela, thanks a lot. Angelo Zino, Vice President and Senior Equity Analyst at CFRA Research, joining us there.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I'm Alix Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We're live from our Interactive Broker studio right here in Midtown Manhattan. We're also live on YouTube, so go ahead and check us out. Okay, so the market's kind of rolling over a little bit here. We got through some earnings. We do have Apple after the bell. We get jobs tomorrow. ... Then what? What's your big takeaway? What's going to be the next catalyst? Joining us in studio to discuss is Carol Schleif. She is, where's the thing? There we go. CIO at BMO Family Office. I knew it was there in my email. Carol, I don't think I've ever seen you in person.
Always dialing in.
I'm
right?
hiding out in the Midwest a lot. No,
This is very exciting.
Yeah, it's very exciting for me. I love being in studio.
Okay, great. Well, Carol, it's great to see you in person. What is going to be your next catalyst that you're looking for within the market? We keep getting through these big events to little or no fanfare. So what's next?
Well, and I think the most interesting thing is to take it up a level, and instead of focusing on every piece of data, because the Fed has kept us really data dependent for a very long time, is to focus on the overarching trend. And there's lots of really interesting things going on intermediate and longer term, especially this, even though it's talked about, it's largely underappreciated, the secular trends we've got going on in infrastructure build, not just infrastructure, but also that implies that we have to build data centers, which means we have to hook them to the grid, which the grid, is difficult getting them hooked. So energy play, utilities, there's lots of different ways to play this. And you can make an argument that this is the biggest infrastructure spend or the biggest productivity potential boost we've had since we put the interstates in the 50s and completely changed the complexion of the United States. And so there's lots of stuff going on there. It can be easy to get caught in the near term. We've got an election coming up. We've got more Fed meetings, more data, but it's important to pull out of that and keep a longer term perspective.
William Woods University, Fulton, Missouri. Awesome.
I was an equestrian science major. I thought I was going to be
equestrian science
a horse trainer. Yep. Exactly.
Wow.
And you're running money. Go
Well,
figure.
I
See-
did get a business degree while I was
Okay.
there too, so I double majored.
So was the science in relation to equestrian stuff, or was it like
No,
dependent?
It was. I wanted to run the barn, not just train the horses, and so there was. And then I found I loved my business classes, and I loved being based in the Midwest because I do know who C.H. Robinson is, and I know who a lot of those other companies are there.
Are you based in where are you based?
Yeah,
now?
I'm based in Minneapolis.
Based in Minneapolis.
Yep.
Nice. Okay. What do we? Okay. Let's say we want to play infrastructure. Let's say some of those great Midwestern industries. How are you guys playing it? How are you getting exposure here?
We've got we've had an important, specifically called out in an ETF, an actively managed ETF, PAVE.
PAVE.
Yeah,
I like that.
which
Yep.
is, and then we actually, another iteration is another actively managed ETF, the AIQ index is one of the ways we've been doing it. There's a lot, you can own the ETF, you can own the individual securities. We do have a lot of clients that own individual securities, lots of ways to play it. But there's also the structure around it. One of the other things we're focusing on from a global standpoint is trying to get to even a neutral weight in Japan when most of the world is underweight.
Right.
Because when you look at the Japanese indexes, they're much more technology heavy than the European, the other
Right.
developed markets, which are more industrial or utility or old school. So there's lots of different ways to play it, both individually as well as just leaning into those sectors.
And so PAVE, if you look on your Bloomberg terminal, it is Eaton, it is Parker Hannifin, United
Right.
Rentals, Emerson. I love these guys.
Right.
They're
is
they do
Karen
all the
Ubelhart,
things.
Karen.
Well, and
Yeah,
it was
this isn't it Karen
when we
Ubelhart
were
thing?
looking for a way to play it, we specifically searched out who are the ones that are going to be based on that rebuilding in the United States. And it's interesting, it was watching C.H. Robinson's earnings, actually, where I first learned that Mexico was our biggest trading partner before the news was announcing it, because they were putting $500 million facility on this side of the border in Texas to help move that stuff.
What's something we have heard, though, in a lot of these conference calls is that there's no doubt a structural shift underway for these industrial guys as they take advantage of the CHIPS Act and the Infrastructure Act and et cetera. But it's still a cyclical industry. And so a lot of these companies wind up having, say, a strong backlog, but they're not like booking the orders right away. Like they're not making the kind of money now that we thought they necessarily would. How do you think about that?
Well, I think it's important you get that same sort of push and pull in the artificial intelligence, because on the one hand, 3 years from now, we're going to be really happy that these big, deep-pocketed companies are spending on infrastructure. But in the last earnings round, we nailed some of them because they're spending on infrastructure to put that in. So it is the advantage we have is that we're investing very long-term money. And so part of it is managing the expectations in the short run with clients that, here's what we're building for the long run. We know it might be volatile in the short run, and so we'll dollar cost average into some of these positions, take advantage if they blow up on an earnings report or something like that. But it really is, you have to stay out of the day-to-day frenzy, if you will, and focus.
So at BMO Family Office, for those who don't know, BMO's Bank of Montreal. So I'm guessing by the name you have a lot of Canadian clients.
We actually, we're the U.S.
You're the U.S. part, okay.
of the family office, and it was BMO in the U.S. had Harris Bank from Chicago,
right,
so
okay.
There's a lot of team in Chicago.
So is there a difference between risk tolerance for a Canadian investor versus a U.S. investor? Do you look at them differently?
Oh, that's interesting.
Stocks, bonds, alternatives, that kind of thing?
Yeah, interesting question. Canada tends to be very resource-based, as you can imagine, and so there's a lot of emphasis there. There is a difference, too, in the individual space somewhat, but, it's no different than any couple that sits down across from us. There might be different risk tolerance there, where one wants to be a longer-term investor and one wants to trade on the latest
So do you
news.
like energy?
Looking for a friend.
Yeah. Energy is definitely an interesting play, and there's some of the, we've got really good energy and commodity analysis. We've been having a lot of conversation for copper for a very long time about overcapacity, undercapacity, and it's hard because, to your point earlier, they are cyclical industries. There's going to be those cyclical flows, but having cyclical operations inside a secular trend is more positive if that secular trend is bringing everybody up. So the backlogs are building. Energy's tough because it's politically charged for a lot of where do they invest? Do they give back to shareholders? How do they participate in the transition of the grid? So,
how about healthcare? I see that in your notes here. I mean, you kind of highlight biotechnology, and I always said, boy, biotechnology, that's a tough place because it feels like it's binary. It either passes and the stock goes ripping, or it doesn't pass and it goes to zero. How do you guys get exposure there?
Well, I think overarchingly, biotechnology is interesting, as are for the artificial intelligence implications that you've got in drug delivery and drug discovery and med tech discovery and things like that. There are, again, actively managed or passively managed ETFs are ways to play it. We don't necessarily call it out as a secular theme in our portfolios. But healthcare in general, especially when you start thinking about the long-term implications and the second and third knock-on effects of the GLP-1 drugs in terms of, do we need less diabetes drugs? Do we need fewer knee implant replacements and surgery there as we move forward? So it's really fun to think about those long-term trends.
Really, yeah, that's so great. It's like you get the opportunity to think of all the derivatives that are going to come after, which is really, really great.
Most importantly, English or Western saddle?
Western.
Oh, okay. Is there a dividing line between?
There actually is 4 seats. There's hunt seat, saddle seat, Western, and then dressage.
Okay.
So
Did they learn something?
Is one of them riding backwards?
no.
Hook up with Katie Greifeld.
Katie Greifeld. They could do a whole equestrian podcast.
She's dressage, yeah.
With Gus, her horse.
That's
horse
fancy.
Gus.
I've been on the horse like a couple times. That's all I got. Carol, it was so great to see you. Thank you so much.
Great.
Come back. Really wonderful talking to you.
Thank
Carol
you.
Schleif, Chief Investment Officer over at BMO Family Office.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm Alix Dio alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the news you need to know with great insight from our Bloomberg Intelligence team that cover about 2,000 companies and 130 industries worldwide. We also do something really special on Bloomberg called The Big Take. And sort of daily, we put out something that's really in-depth, also very timely, with great reporting. And this Big Take also coincides with the lead in Bloomberg Businessweek, and it has to do with Intel committing some serious money into building a factory in Ohio. Joining us now is Max Chafkin. He's a senior reporter for Bloomberg Businessweek, and he co-authored this piece with Ian King on Intel committing all of this money in Ohio. And you can read all of this at Bloomberg and on Bloomberg.com/Big Take. All right, Max, walk us through the piece, what it's about, and what you learned.
All right, so Intel, at one time was one of the world's largest companies. It is essentially one of the founding parts of Silicon Valley. It's the reason it's called Silicon Valley, in fact. But over the last decade, Intel has really suffered. They've sort of fallen behind both the big chip makers in the U.S., NVIDIA, AMD, and they've fallen way behind on manufacturing, behind TSMC and Samsung. And that's a big problem for Intel, this, large, important American company. But of course, it's also a problem for the United States because Intel at this point is the only company making state-of-the-art chips or even trying to make state-of-the-art chips in the U.S. And over the last few years, they've pursued basically a turnaround, and that turnaround is betting entirely on manufacturing. You mentioned the project in Ohio. President Biden has talked about that a fair number of times, including bringing it up in the State of the Union address. There are also major, tens of billions of dollars projects in Arizona and Oregon. And this work is being backed with a lot of money from Washington, $19.5 billion in grants and loans from the Biden administration. So it's this big, ambitious attempt to turn around, a really important company that's fallen on some hard times. It's also a big part of the White House's geopolitical strategy.
They're going to build a mega fab. What is a mega fab, and can they actually? Are they going to get it done here? Because this is big numbers.
So the Intel's put $28 billion into this Ohio site so far. The site is it's about 45 minutes north of Columbus. It's in a bunch of farmland. It's really muddy. You go there now, and what you really see is just a ton of construction. the idea of a mega fab would be to have multiple chip factories. Each one of these things, you're talking on the order of $10 billion. They're going to build 2 to start. And it sounds like a crazy amount of money. But at this point, that is what you need if you want to be able to compete to make chips, say, for the iPhone or for AI chips, to try to compete with NVIDIA, which Intel, really desperately would like to do. But it just isn't quite there yet on the manufacturing side yet.
We have heard, though, of a lot of companies announcing projects and manufacturing facilities that don't get done, or the timeline's pushed out, or it gets pared back. Where is Intel in that?
Yeah, we saw this, of course, during the Trump administration. There has been like a political shift over the last, I'd say, decade, where there's a lot more enthusiasm, both from Republicans and Democrats, for sort of state-backed industrial projects. Not all those have gone great. I mentioned this story that one of the sites that Intel was looking at was this Wisconsin site outside of Racine. People will remember that because Donald Trump called it the 8th wonder of the world 8 or 9 years ago, talking about Foxconn. Foxconn opened there, but it hasn't proven to be the job creator they want. And there's a risk with this project as well. I will say, these semiconductor factories, they are like some of the biggest and most ambitious kinds of factories you can build. There are already, like I said, it's muddy. There's not a lot going on there right now.
Literally
and
and figuratively.
There are already, 1,400 construction workers working on that site today. Long run, they're saying it's going to employ something like 7,000. And you hear that, you think, okay, 7,000 construction workers, like that's a temporary job, not a full-time job. But the thing is, with these sites, construction could go on for decades.
Wow.
It's conceivable, if they really built this thing out, that many of these construction workers could work like their entire career building these things, because the nature of the business is you have to keep reinvesting and you have to keep building new fabs. And the way that analysts and so on are looking at this industry, there's going to be a lot more demand for chips in the coming decades.
And boy, reading your story and Ian King's story here, this is a great example, or just certainly an expensive example of onshoring the money for Intel in Ohio. But then you guys also report $12 billion for a plant being built in Arizona by Taiwan Semiconductor, $6 billion for one in Texas being built by South Korea's Samsung Electronics. So the money is coming into the U.S. to onshore this chip business.
Yeah, I think this may turn out to be, a thing that people are talking about in the next few months as we get closer to November. This has been a big part of the Biden administration's industrial policy. It has components of sort of a jobs program because, like, as I was saying, these are construction sites, potential good jobs for people. Even in these plants, which are run by robots, people still work there. And the other thing you have is this kind of competition with China and the Biden administration really seeing, post-COVID, post-chips shortage, that the United States needs to sort of be able to produce at least some of its own high-end chips, because right now that is not the case. Now, the interesting thing is that idea, the sort of China competition idea, has devotees in both parties. In Ohio is a state dominated by Republicans. The Republicans have been touting this as well. However, it's not clear if Biden doesn't win. It's not totally clear like how things might change with Trump. But right now, it really seems like the U.S. is all in on investing in chip factories. There's even talk of a second CHIPS Act. The idea that we might even appropriate more money for this stuff.
Not to talk about energy, but let's talk about energy. How are they going to power this kind of fab?
Excellent.
Yeah, I mean, that is a huge issue. And talking to Intel, that is like one of the main issues in terms of where you're going to site one of these things. So when you're talking about building a fab, you're talking about essentially you need a lot of space, you need energy, and you also need water. Semiconductors use tons and tons of water. Now, Intel, what they say is they are really mindful of their environmental stuff. They're, all in on sustainability and so on. A lot of the stuff that many companies say, although I have to say they are already recycling a huge amount of water at these plants. And for this industry to have a future, it does have to, continue, improving on sustainability.
Let me just put a plug in for this story. I'm reading it right now. First of all, great reporting as always from Max and Ian King. But great, like, audio and graphics and stuff like that. It shows you, the audio shows, I feel like it's shot by a drone or something. It shows you how big this facility in Ohio is going to be. So it's great stuff. Check it out on Bloomberg.com/Big Take, or you can find it on the Bloomberg Terminal. Max Chafkin, senior reporter, Bloomberg Businessweek, joining us here in the Bloomberg Interactive Broker Studio. Great story he and Ian King wrote on Intel. Bets $28 billion to make Ohio, or as Matt Miller would say, the great state of Ohio, a global chips hub.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
In our C-Suite segment today, a really unique story. The company, his name is Zoetis, animal healthcare. And we talk about animal healthcare and therapeutics. We're talking companion animals like dogs, cats, and horses, but also livestock, cattle, hogs, all that kind of good stuff. You got to get medicine to these animals, and Zoetis does it. Joining us today is Wetteny Joseph, Chief Financial Officer of Zoetis. ZTS is the ticker symbol to load into your Bloomberg terminal. The good news is they're up 7% today on some good earnings. The company's got a market cap of $77.5 billion, so a significant global player in the world of healthcare for animals. Wetteny, thanks so much for joining us here. Just give us a little bit greater flavor about what you guys do at Zoetis. What's the story and what's kind of the growth outlook for you guys?
Thanks for having me, Paul. Great to be with you today. Yeah, Zoetis is the leading animal health company in the world, and we lead our industry in innovation, have demonstrated an ability through our diverse and durable portfolio of products, as well as our market-leading innovation, to actually grow faster than the market. And as you described, we have a part of our business, which is about 2/3 of our business, is really advancing care for pets, so cats and dogs and horses also are companion animals. And then our livestock business is really production animals around the world. And we just delivered an outstanding quarter. We grew our top line 12% operationally and grew our adjusted net income 15% operationally on the back of this really resilient industry that we operate in and the innovation that we lead with.
Typically, people tend to say, hey, you know what, anything to do with pets is recession-proof, right? Because, like, I won't eat, but my pet will. Is that the same in your business? You laugh, but true.
I know.
You know, pet owners would agree with you, actually. We actually have survey after survey, and we see it in our numbers and our results as well. But we have survey after survey that proves this. And about 86% of pet owners in a very broad survey indicated that they would spend whatever it takes if their pet needed extensive veterinary care. And we did a market study also where we gave a hypothetical to pet owners and we said, look, if you had a 20% reduction in your budget, what would that do to how much you spend on your pet health? And the answer is nothing. They would not reduce it. So pet owners at large see this. And, you know, I've been in the industry now for about 3 years. And what's been really interesting is this is not just a phenomenon in the US or in European markets. We see it across emerging markets as well. So it's really phenomenal.
So, Wetteny, I'm looking at Wall Street forecasts on the Bloomberg terminal here for your company. Look at about 6 to 7% revenue growth in each of the next 3-4 years. What are the components of the top line revenue growth for your company?
Yeah, look, we have really multiple sources of growth. We have our companion animal portfolio, which continues to grow, which are innovative products like we do in dermatology. So our key derm franchise is actually $1.4 billion. And we essentially really shaped that market over the last decade. We have parasiticides, which is the biggest segment of the market. It's north of $6 billion in terms of market. And that segment is really growing for us. And we are the market leader in terms of triple combination products that tackle fleas, ticks, and heartworm. And we posted growth in that segment today, really outstanding growth, including our Trio product, which grew 61%. And so those two areas are $2 billion franchises that we have. Wow. And the $3 billion franchise that we are launching, we launched actually 3 years ago in Europe and just recently launched in the US, is osteoarthritis pain, which we believe is a market that is poised for our innovation that we've launched. And we believe those products, both for cats and dogs, will be north of $1 billion in peak sales for us, which is essentially within the first 3 to 5 years after launch. And in that segment, also, we saw tremendous growth in this quarter.
What's competition like? Who are your main competitors?
So look, our main competitors are other animal health companies. So for example, Boehringer Ingelheim is a private company that has human health as well as animal health business. Merck Animal Health is another one that I'm sure all of you are very familiar with. They have an animal health business as well. And then Elanco is also a publicly traded company that has animal health offerings. We are the largest among our competitors, and we also lead with innovation in terms of the products that we come out with. I mentioned dermatology, for example. I just mentioned osteoarthritis pain. These are areas of significant unmet need that we really take our purpose-driven colleagues and our capabilities around innovation to really look for meaningful innovation that changes the standard of care for animals. And we tend to lead and be first in market, and that tends to drive the rest of our industry as well. So these are the main competitors that we have, but we're by far the leader in terms of innovation in our space.
And Alix, you'll be happy to know that this is another New Jersey success story. Parsippany, New Jersey. How about that? Wetteny, I look at your business. Boy, you guys are truly global. 53% of your revenue comes the U.S. and about 45, 46% comes international. Talk to us about the growth outlook for the U.S. versus non-U.S.
So we actually see really great balanced growth across our business. We are in 100 countries. So if you look at our international segment, for example, it grew 8% operationally in the quarter, while the U.S. led the way, particularly with companion animal growing globally 20%. The U.S. grew about 16% on the quarter. But we saw 8% growth in our international segment as well. So as we look out, if you look at the market globally, we are in Brazil, we're in Australia, we're in China, we're of course across Europe, and so very, very global in nature. And we are introducing our innovation across all of those markets, so that tends to drive it. And really, the U.S. is our largest, as you mentioned, 53%. Tends to be a little bit more companion animal heavy. So the U.S. is about 75% companion animal, give or take. Whereas companion animal globally is about 2/3 of the company, with the other third being production animals. Outside the U.S., it tends to be almost balanced. So a little bit, I would say companion animals just slightly over 50%, with the rest being livestock. And we do see growth across our emerging markets as well. And we're also in a lot of different species. So I talk about companion animal, but across livestock, we are, of course, in cattle, we're in poultry, we're in swine, we're in aqua. So fish, particularly in markets like Chile and Norway, et cetera.
I didn't even think about it. I mean, great stuff. Wetteny Joseph, great story. Thanks for taking the time to joining us. Wetteny Joseph, he's a chief financial officer. Zoetis is the name of the company, located in Parsippany, New Jersey. Fascinating story. $75 billion market cap. I mean, it's a huge company. About $8.5 billion of revenue. It's one of those companies you never heard of until you're like, oh yeah. I mean, there's got to be somebody doing this stuff.
Yeah.
And sure enough, there is. And it's truly a global business.
Well, especially as we need more protein to feed the rest of the world as the world keeps growing, right? And it won't all be like Impossible Burgers. You actually need the fish, you need the cows, you need the pigs. Like, how do you keep them healthy? How do you advance that so we're not running on any kind of shortage? I thought it was very interesting also.
Total ecosystem play there.
Do you have a pet?
What's that?
Do you have a pet?
No. Never had a pet.
I can see that about Paul.
Yeah, I know. What can I tell you?
He had 4 kids, though, so there's
offset
it evens out.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.